Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for the midday update, we have Michael Sokol. He is the Senior Managing Director on Nasdaq's Market Intelligence Desk. And Mike, you've been saying all throughout the week, the benchmarks are in really the eye of the beholder. Before we take a look at that though, what's happening in today's action, because we're continuing to hit some highs here?
Yeah, pretty much what we've been seeing all week, which is whatever day's earnings seem to grab the narrative, that's how the sentiment goes. So some days are up because some of the earnings have been coming in better. Some days are down this week. Today we're higher on a couple of tech earnings, and so we're just at the margin anyway, moving higher. And yesterday we had an all-time high in the Nasdaq Composite, and we're pretty close to highs now. All
right, and we'll take a look at this first chart here. We're comparing the S&P, the Nasdaq Comp, and the industrials. And as you had mentioned in your note today, it really is what your benchmark that's determining if you're having a good year or not. Tell us what we're looking at.
Sure. So it's kind of a busy looking chart, but it's a 5-day chart, so each day is distinct with the columns there. But as you might be able to see, the composite, which is in green, is outperforming for the week, particularly today too. We had some good tech earnings. And then the industrials, you see the Dow, that's in that kind of yellow color, that's been underperforming. So a couple of reasons there. It's a smaller index, it's only 30 stocks. These things tend to work themselves out over time, but it's noticeable this week because you have Boeing, for example, and you have United Health, two stocks that are heavily weighted in that index, which for your viewers is a price-weighted index. So a stock like Boeing at $350 has 7 times the weight of an Intel, even though Intel has a bigger market cap. So it can get moved around by outliers, and in this case, Boeing this week has had a tough week, so dragging on the Dow, which is flat for the week. So when you ask people, how's the market doing, if they look at the Dow, they say, oh, it's flat. If they look at the S&P, it's up. So it's in the eye of the beholder.
And the S&P and the Nasdaq Composite, it is market cap weighted versus dollar amount. So that's the big difference.
Pretty much all indexes are market cap weighted, with the exception of the Dow, which traces its history back a long time, but it's price weighted.
All right, now one index that is not up there, we'll go on to our next topic, the divergence of Russell performance. It's been a topic that Brian and I have covered over the past couple of weeks. We've spoken about it this week. Is that an indicator for anything?
You know, it's interesting. You could make the argument that with what's going on in the world, you might want to be more focused on the U.S., and you would think that the Russell Small Cap Index, which is more focused on the U.S., would do better. It's kind of flat this week versus the rest of the indexes, in other words, not underperforming, but year to date it has been. A couple of reasons. One is that some of these companies are riskier. 30% of them don't make any money, so they have to get capital from other places. And so if you're looking at yield spreads or something, that can cause them to underperform. You can make an argument that going forward, if cyclicals do well, then small caps could continue to outperform like they did in past periods. But lately, they have been underperforming.
All right, let's wrap it up with the trading week ahead. This could be the most important week that we've traded all year long. We have that key FOMC rate decision on Wednesday, of course. Friday, we have non-farm payrolls, and it's another busy week of earnings. But Wednesday, once we get that print on how much the rate decrease is going to be, if at all, that could really change the narrative for this market.
Circle your calendars for the 31st. I think the main thing is the number, whether it's 25 or 50 basis points as the cut, but very important is the communication, because no matter what they do, they have to explain it. And you can make arguments for 50 or 25 basis points. And if they do 50, just to throw it out there, they would have to explain to the market why that's not because they see something really negative in the economy. So even if they did the 50, that doesn't necessarily mean stocks would rally, because people might start to wonder, well, why are they doing that much? I think the odds on money is for 25 basis points, but they'd still have to communicate that well, because they don't have another meeting until September. So some are arguing to do more now and not wait. So there's a lot of different moving parts. It's going to be interesting, like you said.
Well, it's based on making the arguments. I had a couple traders say to me, if they do no cut at all, but the language is very clear in September that we'll take a look and it's more promising then, that could also be a good sign that the economy is still ticking along well, but it's still on the table. So would no rate cut actually get a positive reaction? So I think everything that we've been discussing leading up into it, it's really the reaction at the end of the day that's going to make or break the tape.
Yeah, I think they're painted into a corner for at least a quarter of a point. And then they'll have to say, look, we're just kind of reversing what we did in December, and then we're going to wait and see because the economy's strong. That would be a pretty good message, but we'll have to see what really comes out.
All right. Well, next Thursdays and Fridays, midday updates are certainly going to be interesting. Thanks, Mike, so much for joining me.
Happy to be here.
And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.